Let's also welcome AK Prabhakar. Hi Prabhakar, welcome to ET Now. Not a great start to earnings season. Infosys has disappointed slightly on some of the metrics. How are you seeing earnings season panning out? Because most of the fundamental experts have been talking about that earnings growth are 2-3 quarters away, and this we are listening since quite few quarters. In fact, since last 6-7 quarters, we have been listening to this song. How are you seeing this earnings season where IT one is not expecting any major surprise because private banks are going through a phase of a leadership crisis and rise in NPAs. That has been the main pocket of supporting earnings. Even there, a couple of big names would be disappointing. Which sectors, according to you, would lend support to this market when it comes to earnings growth?
Good morning. Yeah, we have the earnings season which started on a lackluster note, but important thing is even crude rising and raw material costs going up, that also will start to impact the earnings. So these are few factors which is likely to impact. And you have pointed out most of the things, corporate governance issue in few private banks, and maybe the leaders like HDFC Bank and IndusInd Bank, Kotak Bank, these will post good results. But we are very positive on other side of the IT also, where we think the results will be very good. TCS is one of our top picks there. So we feel there the result will not be a disappointment and it will beat the expectation of the market. Power is one more sector we think at current level is looking attractive. But geopolitical tension is one thing we need to watch. It is becoming like a Cold War era. Again, two big countries are now doing a proxy fighting. So this can be a geopolitical risk which can derail our rally. So one has to have some cash generated in the system. And if crude moves higher, I think there is a risk of a correction.
Okay, that's the market outlook from a fundamental standpoint, and we also got Kunal's top recommendations to boot. But let's move on and get in those viewer queries. Idea Cellular, that's the first stock in question. We've got a live caller with us joining in from New Delhi. Mr. P.S. Sethi connects on the phone line. Hi there, Mr. Sethi. Welcome to Buy Now, Sell Now. Tell us a little bit about your investment in Idea Cellular. What made you buy the stock? How many shares do you hold currently? Oops, I think that sound is probably, hopefully not an Idea connection. 3,000 shares at 104 rupees, I understand, is what he's got it at. Now, Mr. Prabhakar, every time you read reports about the outlook for the telecom sector, it goes on saying that the competitive intensity has just disrupted the space as a whole. Our investor here, not very surprisingly, is making a monumental loss. At about 70 rupees, what do you advise, not just Mr. Sethi, but a lot of people who are in a similar position or in the same boat? They've picked up shares of this telecom behemoth. Now what should they do?
See, if you are looking at 3-4 years, then telecom sector can come back. Now, because the number of players have reduced and you have hardly major players in the segment. So with 3 major players, once next 1.5 years, the pricing disparity will reduce and pricing power will come back. So by that time, if you can sustain 1.5-2 years, and the 3rd year you will make profit. Otherwise, it is better to go with the leader. Today Jio is the leader, or wants to take the leadership position, and it has other business also. And they have raised almost 500 million from Japan, so they will disturb for next 1 year. So we have to take in this account. But from current level, the downside is very limited in Idea, but upside will take some time for the stock to recover.
Okay, that's of course Idea Cellular for you. He's saying that if you do have a long-term time horizon, then it may be a good hold, especially because there is that recovery in the sector that's on the anvil, especially with the consolidation that's going on. Kunal, not the best of charts for Idea Cellular. What would you recommend?
No, I would recommend an exit. Mubina, I think from 2015, the stock has just about not found its trend back. In fact, on the daily, weekly, monthly charts as well, it's been making a series of continuous lows. Look at the last 4 months as well. I think start of 2018, the stock has shed almost 34 odd % in terms of price performance, and the volume patterns, the way the stock behavior in terms of price is happening in the last 3-4 months as well, or in fact even before that as well. It's not giving an indication that there is a bottom which is getting in sort of information over here for the stock price, and that I think is a big worry, because now if the stock breaks this 70 odd mark, 68, 70 odd mark as well, this could be almost 6 years, 5-year, 6-year low for the stock, and that generally does not augur well for the stock price. So I would suggest an exit on idea, and maybe I think switch to the large cap stock, maybe like Reliance or even Bharti Airtel as such as well.
Okay, it's an exit according to Kunal. So based on the decisions, based on the rationale rather given by both the experts, it's a call you'll have to take. We have a live caller joining us right now on the show, Mr. T. Radhakrishna from Bengaluru. Thank you so much for joining us. What's your question?
Sir, I have 40 TCS at 2,650. What should I do? Whether hold it or can I book profit now?
Well, making money on this one, as have a lot of investors, because in the last 3-4 months, it's been a spectacular rally for TCS. Kunal, I'll come to you first. What should he do with TCS?
I think you should book out part profits over here. Now, the stock has a tendency of rallying, after multi-month consolidations, establish a new range, and then, once the stock enters into that range, it remains into that range for a prolonged period of time. So if you look at the charts for 2017-18, only for TCS, from 26,2700, which was earlier the hurdle for TCS, it saw a big rally, big spike as such coming into the second half of 2017, and then 3250, 3300 approximately act as now strong resistance zone. So I sense that the stock is now going through a process of prolonged consolidation, and closer to 3200 or 3250 range, you could see supply coming into the stock in terms of price pattern. So I would suggest to book out part profits over here. Maybe the stock retraces back towards 2800, 2850, look to buy it back again and sort of trade in this range till the time stock doesn't break out.
Hope you've taken note of that advice coming in on TCS. Look to hold on to the stock, but it could be a partial profit booking as of now, given that the stock is likely to be in a bit of a range. 3,180 for now. What's the earnings season holding in stock for TCS, Mr. Prabhakar, on account of what Infosys has delivered? Is that some sort of an indication? What should our investor do? Because you clearly seem to be fairly upbeat on the prospects here.
Yeah, no, for us, TCS is going to be an outperformer. Now in FY19, this is going to give the best result in large cap. So we maintain our buy rating on the stock. So now if somebody wants to invest right now also, TCS is the best place to invest. And now for FY20 earnings, it is trading at 17.5 times, which is a median, and I think more upside is possible, and there could be an earnings surprise is what we internally feel.
Okay, so TCS could deliver an earnings surprise in Q4. That's what Mr. Prabhakar believes.